This is going to be an outright insane week for the stock market. You're going to have massive catalyst, massive data, and really a lot of reasons for the markets to move big this week. And that's what I want to get into here in this video. So take this how you will. There's implications for AMC, but really it's all about the broad markets in this week. Unless we get an update specific to AMC, you might see the collateral crisis get a little bit worse, especially if the markets do fall, or if you do get a catalyst from the court date or anything else with AMC, that could definitely hold precedence over what is said here in this video, but you're going to get a big move in the markets. Now, not to mention, this week is quad witching. Now, for anyone that has forgot what quad witching is, it is when 4 different derivative classes expire on the same day. Now, you have stock futures, stock options, index futures, and index options that all report or all expire on the same day. Now, historically, quad witching days tend to have higher volumes, but they don't necessarily tend to be either skewed to a negative or positive reaction. You do, although, tend to get a little bit more, obviously, volume, like I just said, and volatility in these quad witching weeks. Now, from 3 p.m. to 4 p.m. on Friday, that's when the quad witching is on June 16th. That's where you can expect a lot more activity, and that's because people start to get exercised on some options contracts, on futures, right? Some of that closing out process really starts to happen in the last hour of trading on quad witching. So I think that's when you're going to see the biggest move overall. And specifically with AMC, you're in a very interesting position because AMC stock recently has started to recover. I mean, on Friday, you were up over 2%. If that bounce momentum continues, this week could be huge for stocks like AMC. Now, if we take a look at the economic calendar, I mean, it's jam-packed. So on Monday, you're going to get a lot of bond auctions. Now, you're also going to get consumer inflation expectations for the month of May. You're expecting that at 4.2%. Last month's reading was 4.4%. But I think the most important thing on Monday probably going to be these bond auctions. Now, you're going to get a 6-month bond auction, 3-year bond auction, 10-year bond auction, and 3-month bond auction. Now, what these bond auctions basically is doing right now is draining liquidity out of this market. The TGA, the Treasury General Account, was basically wound down to nothing as we were approaching a default. Now they have to replenish that, and the Treasury plans to sell about $1.5 trillion worth of bonds throughout the rest of 2023. So this dump, essentially, of bonds on the market is going to take money out of stocks. It's going to take money out of certainly derivatives, out of even some fixed income, some credit markets, potentially even real estate or crypto, to go out and buy these bonds. Now, that's the big catalyst for Monday. Tuesday, it's all going to be out about inflation. Inflation data comes in at 8:30 in the morning. You're expecting a 0.3% month-over-month headline reading. Last month's reading was 0.4%, expecting a deceleration in that headline month-over-month reading. Now, core inflation rate year-over-year, you're expecting that at 5.4%. Last month's reading was 5.5%. Another deceleration is expected. Headline inflation year-over-year, this is where you're expecting to see the biggest fall. Markets are currently expecting a 4.1% reading. Last month's reading was 4.9%. So markets are expecting the headline year-over-year number to fall quite a bit. And what's interesting about this is last month, the headline number did fall a lot, but the month-over-month numbers did not look so good. But markets still rallied upon CPI data. So instinctively, I want to say the month-over-month numbers are going to be more important, and I think they truly are. Markets reacted to the year-over-year numbers last time around, so it's very hard to say. But you do have pretty rosy expectations for inflation coming out Tuesday. Now, core inflation rate month over month, you're expecting that at 0.3%. Last month's reading was 0.4%. So expecting another deceleration to inflation, the core inflation, on a month over month basis. And then even on Tuesday, you're going to have a 52-week bond auction, a 1-year bond auction, as well as a 30-year bond auction. Again, going to drain more money out of the markets. Now on Wednesday, 8:30 in the morning, you're going to get PPI month over month. Now PPI is producer price index. I like to think of it producer price inflation. You're expecting this to come in around 0.1%, could come in as low as negative 0.1%. Last month's reading was positive 0.2%. So you're expecting, inflation on a just CPI basis to fall like a rock, and you're expecting PPI to also trend downwards. These are pretty optimistic targets. Now, coming this week as well on Wednesday, you're going to get at 2 p.m. the Fed interest rate decision as well as the FOMC economic projections. Now, this is a report basically of the dot plot, where Fed members think Fed policy is going to go. Last we knew, nobody was expecting a rate cut in 2023. Do you get people that start to expect a rate cut in 2023? Well, that's going to be very important because right now markets are very much not in agreement with Fed policy. June 14th, you're expecting the Fed to pause. Now, if inflation comes in hotter than expected on Tuesday, they're not going to pause. They're going to raise rates again. The pause is expected with a 70% probability. So you're expecting this by quite a good margin. So believe it or not, Tuesday could be the biggest move of this week, just kind of pricing in the Fed policy of the next following day. You're not going to have a lot of time for markets to digest the CPI report and what that means for Fed policy. It's all going to happen pretty much instantaneously. You want to watch investing.com/Fed rate monitor tool like a hawk, especially on Tuesday. But continuing on, for July 26th, markets are expecting the Fed to raise rates by a 53% probability. September, you're expecting the Fed to pause, so to be one rate hike higher, but for the Fed to still pause. And then by November, with a 39% chance, markets are expecting the Fed to cut rates. Now, there's also a 36.5% chance in November that we get another rate hike. And there's a 10% chance in June we get a rate hike. In July, we get a rate hike. In September, we get a pause. And in November, we get another rate hike. So the probabilities are all over the place. Now, for December, you're expecting a pause with a 38% probability. And by January of 2024, you're expecting another rate cut with a 33% probability. So you're basically expecting a pause, and then a rate hike in July, and then a pause in September, and then a rate cut in November, which typically that's not what the Fed likes to do, and that historically only really happened in the 80s. There's not really any precedent for the Fed pausing, raising, pausing, cutting, and subsequently cutting after that as well later in 2024. You've never seen that in a very long time. So I think what this means, not that that's the course the Fed's going to take. I don't think that's the case. But I think there's a lot of room for repricing of Fed policy. Maybe that's a rate hike in June. Maybe that's a pause in July. And maybe that's more pricing in of a pause throughout the rest of this year. Not necessarily rate cuts, but not necessarily that the Fed's done raising rates as well. So I think the CPI report and the Fed meeting going to have massive implications for our markets. And that's all you're going to get on Wednesday. On Thursday, you're going to get retail sales month over month. That comes in at 8:30 in the morning. You're expecting a negative 0.1% reading. Last month's reading was positive 0.4%. If you take a look at the kind of the last year of retail sales, it has been in the green, in the positive. The blue is positive. 1, 2, 3, 4, 5, 6 months out of the last 12. It has been negative 1, 2, 3, 4, 5 months out of the last 12 months. And it has been at 0% on a month-over-month basis 1 month in the last 12 months. So we're not really seeing a trend here. I mean, if you wanted to try to make one, if you took out the reading that we got January of 2023, where retail sales increased 2.8%, then you would be definitely in a negative downturn trajectory for retail sales. Now, retail sales coming in negative is actually a positive thing for Fed policy, for what the Fed wants to accomplish, and the markets will take it positively. But if retail sales come in much worse than expectations, that's recessionary, and that's ultimately what investors fear. Now, on top of that, on Thursday, you're going to get retail sales, excluding autos, Philly Fed Manufacturing Index, initial jobless claims, Philly Fed new orders, prices paid, business conditions, employment, retail sales year over year, import prices, export prices, as well as other Fed districts, basically giving you a data dump on what's going on in their specific region. And that can sometimes be important to the markets. Now, on Friday, you're going to get another very big catalyst, and that is at 10 o'clock in the morning, the Michigan Consumer Sentiment Survey, the preliminary survey for June. Biggest thing you want to watch here is 5-year inflation expectations. 5-year inflation expectations are at the highest point that they have been at in the last 10 years, and it's at 3.1%. If you break above 3.4%, which in reality is not too far off of where we are, you would break a new 25-year high for 5-year inflation expectations. That would beg the question, is inflation expectations becoming unanchored? And that is the one thing away, or one thing missing, I guess you could say, from getting Paul Volckered, is inflation expectations have remained pretty steadily anchored. But recently, they've actually started to rise, going from 2.9% in March to 3% in April to 3.1% in May. If your June number comes in at 3.2 or higher, you're going to be showing a pretty consistent trend in inflation expectations. Last time 5-year inflation expectations went up like this was September of 2022, where inflation expectations were at 2.7%. In October, they hit 2.9%. And in November, they hit 3%, and then came down to 2.9%. What happened last time around when you've seen inflation expectations fall and then rise to this degree? Well, October of 2022, you take a look at the S&P 500, not a very good time to be investing. That was the lows of this cycle so far. So I think the markets have some serious catching up to do to the downside if this data supports we're not going to get rate cuts. If the Fed says, again, we're not going to get rate cuts, considering the Treasury needs to pull $1.5 trillion of liquidity out of the markets, and a whole plethora of other catalysts we've talked about here in this video, I think there's a lot of room for the markets to fall here. And I'm really not the only one saying this, but it seems like it. As the markets have been going higher, everyone seems to be very bullish on this market, when in all reality, this is kind of the time to be a little fearful. This is the time to say, hey, is this justified? Now, some names, sure it is. Stocks such as AMC, I think, still make for attractive opportunities, right? With a potential short squeeze on the near-term horizon, if collateral especially does start to dry up, if the markets do start to actually fall, that could turn into a very positive thing for AMC. And I think on a risk to reward basis, your small and mid-cap names such as AMC, are very attractive on a risk to reward kind of ratio. AMC's back to its pre-COVID market cap. I mean, after being higher than that for years. Should it be there? Probably not. Revenue is going to soar with AMC once the domestic box office is back to where it was pre-COVID. So if you even look ahead on a fundamental basis, it makes a lot of sense to potentially buy AMC because fundamentals are improving. Odds of a short squeeze also are improving. So those are some key things that I'm watching for this week as far as big catalysts. Now stay tuned to the channel for the next video diving into exactly how some of these catalysts could affect AMC stock quite big and where AMC could go by the end of this week. Thank you for watching. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys enjoy the rest of your day, and I will see you in the next one.